With Nokia Corporation NOK trading in the neighborhood of $14.09 after hitting multi-year highs near $17.45, retail chat rooms and traditional financial media are still trying to evaluate the stock through a cracked, obsolete lens. For years, mainstream market commentators dismissed the Finnish telecommunications icon as dead money, a nostalgic remnant of a bygone era of plastic-backed mobile phones and stagnant European carrier spending. Yet this superficial consensus completely misinterprets the massive physical reality unfolding beneath the surface of global data transmission. While retail investors chase high beta momentum stocks on Robinhood and institutional pundits obsess over the gross margins of select mega-cap semiconductor fabricators, they are systematically ignoring the fundamental physics bottleneck of the artificial intelligence supercycle, the data center interconnect and optical transport crisis. Large language models and cluster-scale AI compute engines do not operate in isolated vacuums. They require thousands of specialized accelerators to share petabytes of data simultaneously with near-zero latency. As hyperscalers race to build massive GPU clusters, traditional copper wire infrastructures and legacy routing fabrics hit absolute thermal and electrical boundaries. Light, not electricity, is the only medium capable of scaling this bandwidth without melting down under its own thermal load. This structural shift has triggered a massive, underappreciated boom in Nokia's network infrastructure division, specifically within its optical networks and IP routing business units. In recent financial reports, Nokia's net sales to AI and cloud customers exploded by over 100% year-on-year, driven by billions in strategic order intake. The market is only beginning to price in the fact that Nokia is no longer just a slow-moving cellular tower hardware vendor, but an indispensable structural gatekeeper of high-speed photonic and optical connectivity for the next generation of global data architecture. Market dynamics and institutional positioning, navigating volatility and smart money accumulation. The daily trading volume and intraday price action of Nokia reveal a textbook institutional accumulation pattern masked by high retail volatility. Following an aggressive 140% vertical surge earlier in the year, short-term momentum traders and reactive retail accounts panicked during broad macroeconomic jitters, creating classic shakeouts and sharp pullbacks from annual highs. However, an analysis of block trades and institutional filings shows steady, quiet accumulation by sophisticated global asset managers during these dips. Smart money recognizes that Nokia's transition towards high-margin enterprise and cloud provider contracts has permanently altered its risk-reward profile. Macroeconomic headlines regarding sluggish telecom carrier capital expenditures in Europe and North America have provided convenient smokescreens for institutional heavyweights to build long positions at attractive valuations. While retail investors get shaken out by short-term headline noise regarding legacy mobile infrastructure spending, institutional allocators are looking at multi-year order backlogs that stretch well into the late 2020s. Hyperscalers are placing advance orders far ahead of delivery schedules, simply because optical component supply chains are running at maximum capacity. This dynamic creates an exceptionally stable earnings floor, insulating Nokia from the traditional boom and bust cycles that plagued its historical hardware business. Audience engagement check. Are you currently holding a position in Nokia through its structural transformation, or are you waiting for a deeper technical pullback to build your core allocation? Drop your strategy in the comments below. Business model and historical context beyond the legacy mobile narrative. To understand where Nokia is heading, one must completely discard the mental model of the company as a distressed handset maker or a basic 4G, 5G base station assembler. Today's Nokia Corporation is an enterprise-grade technology titan anchored by four formidable pillars: network infrastructure, mobile networks, cloud and network services, and Nokia Technologies. The crown jewel of the modern operational framework is the network infrastructure segment, encompassing optical networks, IP routing, and fixed networks, which directly serves the explosive infrastructure demands of hyperscale cloud providers, enterprise campuses, and web-scale operators. Historically, Nokia's top line was chained to the capital expenditure cycles of traditional communication service providers, CSPs, who upgraded their cellular towers on sluggish multi-year schedules. That legacy exposure still exists within the mobile networks division, providing a stable, cash-generative baseline, but it is no longer the primary growth engine.
The true growth catalyst is found in Nokia's vertically integrated coherent optical engines, advanced IP routing platforms, and the newly launched AI RAN radio access network architecture. By combining artificial intelligence directly into network optimization and software-defined architectures, Nokia enables telecommunications providers and cloud giants to extract over 100% spectral efficiency gains while dramatically lowering power consumption. This shift transforms Nokia from a commoditized hardware supplier into an essential software and hardware systems architect whose innovations dictate the operational efficiency of the entire digital economy. Future outlook, catalysts, and risks, the road to 6G and AI-driven supercycles. Looking out across the multi-year horizon, Nokia is positioned at the intersection of several unstoppable technological tailwinds. The primary catalyst is the relentless acceleration of AI infrastructure buildouts, which necessitate continuous upgrades to data center interconnects, optical transport grids, and high-capacity IP networks. Furthermore, the industry's early transition towards 5G Advanced and the foundational groundwork for 6G technologies will require a fundamental re-architecting of global network grids. Nokia Bell Labs remains a premier global engine for foundational telecommunications patents, ensuring that every upcoming generation of wireless communication generates substantial high-margin licensing royalties through the Nokia Technologies division. At the same time, investors must remain vigilant regarding key structural risks. Geopolitical friction, supply chain bottlenecks for advanced optical components, and potential shifts in capital expenditure budgets among mega-cap tech spenders can introduce periods of sharp interim volatility. If hyperscalers experience a temporary digestion phase in their data center deployment cycles, order intake velocity could face short-term normalization. Additionally, execution risk remains inherent in any massive operational restructuring plan designed to optimize operating margins and accelerate software integration. Yet, when evaluating the broader macroeconomic and technological landscape, these near-term risks pale in comparison to the structural necessity of Nokia's portfolio. As the world transitions towards agentic AI frameworks, massive edge computing deployments, and immersive digital realities, the underlying pipes and routing fabrics of the internet must expand exponentially. Nokia holds the keys to that expansion. Looking past short-term price noise and anchoring on the underlying operational transformation reveals a compelling thesis. Nokia is quietly morphing into one of the most critical structural value plays of the decade. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Thank you for watching. Don't forget to like, comment, and share this video to support the channel. Like button.